Loans have become an integral part of modern financial life. Whether you're planning to buy a home, fund your education, or even start a business, loans offer a helping hand in achieving your goals. In this comprehensive guide, we'll explore the diverse world of loans, helping you understand the various options available and guiding you in making informed financial decisions. Understanding personal loans.
Benefits of personal loans.
Personal loans are unsecured loans that can be used for a variety of purposes, from consolidating debt to covering unexpected expenses. The primary benefit of a personal loan is its flexibility. You can use it for almost anything without providing collateral. Additionally, personal loans often come with fixed interest rates, making it easier to budget for your repayments.
Drawbacks of personal loans.
However, personal loans typically have higher interest rates compared to secured loans. The absence of collateral means that lenders take on more risk, resulting in increased interest charges. Borrowers with lower credit scores may also face challenges when applying for personal loans. Exploring mortgage loans. Mortgage loans are specifically designed for purchasing real estate. They come in various forms, including fixed-rate mortgages and adjustable-rate mortgages, ARMs. Types of mortgage loans. 1. Fixed-rate mortgages. These offer stable monthly payments but may have higher initial interest rates. 2. Adjustable-rate mortgages, ARMs. ARMs have lower initial rates but can fluctuate over time, affecting your monthly payments.
Pros and cons of mortgage loans.
Mortgage loans allow individuals to become homeowners, but they come with substantial commitments and responsibilities. While homeownership builds equity and offers tax benefits, it also involves property maintenance and the risk of foreclosure.
The world of auto loans.
Different auto loan options. Auto loans provide a path to owning a vehicle without paying the full cost up front. Options include dealership financing, bank or credit union loans, and online lenders. Advantages and disadvantages of auto loans. Auto loans make it possible to drive your dream car, but they come with interest charges and potential depreciation. Consider the down payment, interest rate, and loan term when choosing an auto loan.
Credit card loans and their varieties. Credit card loans explained.
Credit cards offer revolving credit, allowing you to borrow money up to a set credit limit. However, this convenience can lead to high interest charges if not managed wisely.
The upsides and downsides of credit card loans.
Credit card loans offer flexibility and rewards, but their high interest rates can lead to debt accumulation if you're not careful. It's essential to make timely payments to avoid hefty interest charges.
Student loans for education.
Types of student loans. Student loans are crucial for funding higher education. Federal and private student loans are the primary categories, each with its own terms and conditions. Advantages and disadvantages of student loans. While student loans open doors to education and career opportunities, they can lead to substantial debt. Federal loans often come with more favorable terms and repayment options, making them a preferred choice.
Business loans and their diversity. Various business loan options.
Business loans cater to entrepreneurs seeking capital to start or expand their ventures. Options include term loans, SBA loans, and business lines of credit. The pros and cons of business loans. Business loans can fuel growth and innovation, but they also require responsible management. Understanding the terms, interest rates, and repayment schedules is crucial for successful business financing.
The versatility of home equity loans.
Understanding home equity loans. Home equity loans allow homeowners to tap into the equity built in their homes. This loan type offers lower interest rates, making it attractive for home improvements or debt consolidation.
Benefits and drawbacks of home equity loans.
Home equity loans are secured by your property, meaning that you risk losing your home if you can't make payments. However, they often come with lower interest rates and tax-deductible interest, making them a cost-effective borrowing option.
Payday loans and their controversy.
An insight into payday loans. Payday loans are short-term, high-interest loans designed to cover unexpected expenses. They are often criticized for their high fees and potential debt traps. The controversy surrounding payday loans. Payday loans are considered a last resort due to their exorbitant interest rates. Alternatives, such as personal loans or credit cards, are generally more cost-effective solutions for financial emergencies. How to choose the right loan for your needs. Selecting the right loan requires careful consideration of your financial situation, goals, and risk tolerance. Factors to assess include interest rates, loan terms, and eligibility criteria. Managing loan repayments effectively. It's essential to budget for loan repayments and make them on time to avoid late fees and damage to your credit score. Consider setting up automatic payments for convenience.
The impact of interest rates on loans.
Interest rates significantly affect the overall cost of a loan. Be aware of how interest rates can fluctuate in adjustable-rate loans and plan your finances accordingly.
Credit scores and loan eligibility.
Your credit score plays a vital role in loan approval and interest rates. Maintaining a good credit score can help you secure loans at favorable terms. The role of collateral in secured loans. Secured loans require collateral, such as a home or a car, to mitigate the lender's risk. Failure to repay a secured loan can lead to the loss of the collateral. Conclusion. In the realm of loans, one size does not fit all. Understanding the different types of loans, their advantages, and their potential drawbacks is crucial in making informed financial decisions. Choose a loan that aligns with your needs and financial situation, and always prioritize responsible borrowing. FAQs. What is the best type of loan for debt consolidation? 1. The best loan for debt consolidation depends on your credit score and the total debt amount. 1. Personal loans and home equity loans are common choices for debt consolidation. Are payday loans a viable option for emergencies? 1. Payday loans are generally not recommended due to their high interest rates. 1. Consider alternatives like personal loans or emergency funds for financial emergencies. How do I improve my credit score for better loan terms? 1. You can improve your credit score by making timely payments, reducing debt, and managing credit responsibly. What is the difference between fixed-rate and adjustable-rate mortgages? 1. Fixed-rate mortgages have a stable interest rate throughout the loan term, while adjustable-rate mortgages can change, potentially leading to lower initial rates but higher payments later. How can I protect my collateral in a secured loan? 1. To protect your collateral, ensure you can make timely payments. 1. If you face difficulties, communicate with your lender to explore alternative solutions.